Hello, this is Jeff Crosby calling in for the 3xEquity webinar, and I see a lot of people are online and on the call. So what I want to do is to be able to honor those that are on time and move through the webinar to make your time efficient. What I'm going to do is also I'm going to mute all the lines right now in just a second so that in case there's any background noise, and then I'll unmute the lines at the end to ask any questions. And then also to remind those on the line here that you should have received an email from WebEx inviting you to, which many of you already are, inviting in to attend the webinar that you can actually watch from your computer, because there's going to be some cool stuff from the 3xEquity tool that I think that you're going to want to see if in fact you are in front of a computer. If not, I'll do my best to make it helpful through this conversation here. So for right now, I'm going to mute all the lines and take us through it and hopefully give you a lot of value over this next 20 or 30 minutes or so.
The conference has been muted.
So my name is Jeff Crosby. I run a practice probably similar to many of you out there, maybe not as successful perhaps as you are, but that's what I've done for many years. Microsoft chose me several years ago to be their advisor of choice for their employees, so I got kind of lucky, and where I wound up managing a bunch of money from their executives and whatnot. So I've managed money for Microsoft professionals over the last 15 years or so up here in Seattle, Washington, and I don't have a lot of clients, but organically, but a lot of clients with high net worth. And then I've also bought some practices as well in the industry and have a decent experience of doing that. Just on a side note, for fun, I do Ironmans. I've done 18 of them where you swim, you bike, and you run. I've done Hawaii a few times, so I try to stay sharp mentally in the business by doing some extracurricular activities such as Ironmans. I got a team of many people that work for me, and they've been with me a long time, and I'm thrilled to have a solid team. So here's what we've done, is that, you know, we thought, gosh, there's not many tools out there where advisors can get a valuation of their practice, whether you're a buyer or a seller, and some of the companies out there, it takes about 6 weeks to get back your valuation. A lot of it's boilerplate, and it's not sometimes real specific to your practice, your area. So I thought, what if we could go out and create an online tool that advisors could get real-time, real valuation, real simple. So this has been under construction for 2 years. We built it, and it's at no cost, and you'll be able to see it here in a moment. And then what we also have done is we thought it would be really great if we could provide a report where you can see how your practice compares to the top 25% in the country or the national average, and it's information used by the Moss Adams report. So by you guys attending this call today as well, I'll make sure that all of you have access to this report, that you can get a comparison of your practice or what a practice is worth and what of your practice or practice you want to buy. However you want to use that report, normally it's $500, and we're going to give it to you at no cost. So what I first want to ask you the question, or make sure you are aware of, that probably many of you are, is there's thousands of advisors out there that are going to be retiring or selling their practice in the next 5 to 10 years. Are you one of them, or are you someone that would actually, you know, like to buy their practice? So there's a lot of practices in motion. And then on the wirehouse side, you know, there's a lot of deals that are expiring coming up on the forgivable loans and whatnot that advisors are going to be in motion, that if you're in the buying mode, you're going to want to, you know, potentially, you know, tap into that market as well, or potentially you're someone at a wirehouse that's looking to get out of the industry. But first, and this might be a little different than what you might have thought for the call, is if you're a buyer, but I first want to pose the question, you know, why would you ever sell your practice? You know, you want to think about that. If you're on the call here and you're 60 years old, 65 years old, looking to move on, you know, Why would you want to do that? And there are some reasons to do that, but to perhaps how you structure your business, there could be a lot of arguments why we would never want to sell our practice in our industry. Based on the cash flow, the margins that we can make. Maybe you want to bring in a junior advisor. Maybe you want to be a chairman emeritus and keep doing this till 80, 85 years old. Who knows? But this is something that you want to really strongly consider, is that if you stayed in the practice, what would it look like if you were never to sell? And there are reasons why you should sell that we'll go through here in a minute. And then I'll show you a graph and showing you the tool why it could back up reasons that you should sell. Well, here are some reasons why someone would want to sell. If you got assets going out the door, that's a problem. Your book eventually potentially could be worth zero. And in this industry, it's all about asset flow. If you've got a negative asset attrition, your book is going to be worth less, your clients are going to feel it, and that would be a reason you would maybe want to get out. If you're not investing in a business, we look at deals all the time, and people come to us about potentially wanting to buy their practice. And sometimes, I run my business at 80% margins. Well, sometimes not spending enough in your business is a bad thing. And so a lot of advisors out there aren't investing in their practice the way they should. And if they're not, that could be also a reason to get out. If you don't have relationships with your client's kids, we've probably heard a lot about it, generational planning and whatnot. When a client dies, oftentimes those assets go somewhere else if you don't have relationships with your kids. Well, if that's the case, the value of your practice could go down in value. It's a big responsibility for your clients. Those of you that have been doing this for a while and take great pride in your practice, it's hard to float the Grand Canyon, or it's hard to travel Europe or go into South America and be completely unplugged from your business if we are truly good at what we do, because we feel like we have to have our hands on to our business. So there's tremendous responsibility to our clients. And so it's really hard to unplug. And for me and probably a lot of you, I can't even unplug on the weekends. And maybe I need some therapy and some coaching and counseling to teach me to do a better job of that. But I feel a tremendous responsibility to your clients, whether a client was looking at buying a home on the weekend, a family member passes away. We gotta, we want to be close in contact to our clients. So it's hard to really unplug. And then again, a market correction. As we all know, a 10% drop and pulling 10% of our money, clients' money from their portfolio, it's tough to get back to even. So market correction could rattle our clients. It could drop the value of our practice, and it's a lot of energy. As we all remember back to 2008, and some of us who were in the business in the early 2000s, it's a lot of energy. And with the market, it's going to correct. We all know that. It's when, and we better put on our armor and be ready to roll, because our clients are going to start looking at their statements closer and asking questions. And the other part too is that there's a tremendous risk to us as advisors from a compliance standpoint. And if you have a compliant, I just had someone presented to me that they copied a client's signature from a previous document, and not a big deal. A big deal. They didn't think it was a big deal. The client wanted to do a trade and whatnot, and stuff went sideways. And then their compliance department started investigating certain things, and hey, there were other problems in that advisor's file, and that guy was out of the business. They came out to his office on Wednesday. He's out of the business on Friday. Computers taken from his office. His office is shut down. No access to his emails. That guy's going to have to sell his practice probably for 60 cents on the dollar. So compliance is, a risk to us. So here's how you, in this tool that each of you have access to at no cost that we built, and we'll welcome your comments and feedback afterwards, how it could apply to you. But it's called 3xEquity, and I'll just back up real quick. Here's our home page. You can change your revenue, your GDC, what's reoccurring, what keeps continually come in. Hit this valuation process. This gives you kind of a Zillow's concept, a big, broad range. You can move these sliders again if you want. And you're like, well, I want something more specific. specific. So then you go down here and customize. Now, I'm already signed in, you guys and ladies and gentlemen, and so you notice here I'm not logged out. So for you to log in, you just need to put your name and email in there, and then you'll have access to this site. So you can change your revenue right here. So this will change the value of my practice today. So if you notice up here in the right-hand corner, moving the sliders, or I could even be in here and using an arrow key, moving my numbers to get it exact, but that changes the value today. And certainly the value in the future, but more it has an impact today. What's my reoccurring revenue? Well, no, actually my recurring revenue, that's 44%, it's 50%. Okay, cool. So then that increases my value today. So these two areas here have a pretty big impact on what's my value today. Then it shows what's my value in 5 years from now, and that's what's my value in 10 years. And then you can change your clients, how many number of clients you have, and that, of course, will change the value. And here's a big deal on asset flow is that, that's what all these broker-dealers, that's how we grow our book is by asset flow. And so if we've got less assets coming in than assets going out the door, well, we're going to have a negative asset flow, and it's going to drop the value of your practice. And so, wow, we don't like this trend. It just went from, 500,000 to 380 to 276 in 10 years, or maybe my asset flow is positive. So this really allows you as an advisor to do your own planning for your own practice, or even to potentially look at a practice you look at buying. So asset flow is a big deal in terms of really understanding the value today and what it's going to be like going forward. And if I got $2 million going out, $4 million coming in, I got a positive asset flow of $2 million. Well, what is that percentage to me, on my assets? And so you can, make those adjustments here. And then return, and the way this model works is that it's assuming you're going to have a positive 2% asset flow year over year over year for the next either 5 years or 10 years. So it's assuming, and then it's going to compound. So that's how this model works. Well, what average rate of return? What if I had 0% asset flow, okay, but yet I've got a 0% rate of return on my practice on after fees and what I'm earning on my AUM? Well, that's going to go down in value, of course. What if I could? Well, I have a 0% asset flow, but actually, what if I don't bring in any money, but I can earn a 5% rate of return after fees? Well, now you're going to see your practice go up. So this is literally letting the market increase the value of your practice, which could be possible, which we've experienced, the past, 4 years or so in the market. Well, here's where we could get into trouble. And what in the future value of our practice is, what if the market gets corrected? We're not going to use 20 or 30% like 2008, but what if we go through, a period of 2000 to 2001 or 2002, or you pick the number, even 2011, where the Dow was down 5%. And again, this is compound, and this is year over year. But what if we had a decade where it was down, or even a decade where it was down 2%? And I had a gentleman referred to me here recently from a top brokerage firm, and he wants to move, but he's moved once earlier, and he feels like he can't move quite yet because he essentially shorted the market for his client's portfolio. And so, he's having to show his clients, I haven't done well on your investments compared to the market the past, 3 years. So he's kind of having to ask for forgiveness. So he's not in a position to move his book because he's essentially had a negative return. So, but this allows you to really hone it in for your own practice, what you think going forward it would be worth. And then this is a really cool tool that, I'm lucky in my practice, but all of my clients are all between the ages of 0 and 59. So I don't have old clients. They're all young executives. And so all my clients are between 0 and 59. But, what if you can adjust your client base? What if your clients were, you had 20% or so between 0 and 59, and then you have about 30%, which might be more standard or so, between ages 60 and 69. And then I've got about, also 30% between ages 70 and 79 and 20% between, over 80. And it goes from left to right on this tool, so all this adds up to 100. So you actually get to change the age group of your clients to see what the valuation is for your practice. So so you make these changes and you get dialed into wherever you want. So we're going to make this a little more positive to go into the next section, because deal terms. So here's the value of my book today. In fact, I'm going to even change my reoccurring a little bit more, closer to 60% or so. And here's what it is in 10 years from now. And I'm going to have a little higher average rate of return than 2%. It's 5%. There's my book. And for the illustration purposes, I want to create a little bit higher value for your practice. So we're going to have, close to 70% reoccurring. That changes the value. So then you go in the next step, and you can see the deal terms. If someone, so the gentleman that I said that had, that his doors were shut 2 days after he opened up an investigation on a Wednesday, they're shut on a Friday, he's having to sell his actually at a higher than a 35% discount. So this is if someone came in and gave this deal structure cash from what you just, went through here. And so option one is kind of a distressed all-cash deal. Option two is where someone's going to put 30% down and the seller is going to finance 50% over 5 years, and there's going to be an earn-out on 20%. Well, now the value of that deal is $665, and it's 54% more than option one, and the earn-out amount is $26,000. And then the seller says, well, you know what, I don't like that deal. I don't need cash up front. I want as much income as I can, and I'm going to have you take on some responsibility, buyers, but I'm going to still take on a lot. So the buyer puts down 10%, and the sellers were willing to carry an earnout of 90%, over 8 years, and this is the payment. Well, this actually pays the seller the most over this time frame than option one or option two. So this shows you this is still at no cost. You can see different deal terms. And then where we get interesting is here's the report that all of you guys are entitled to or eligible for coming out today, where we actually call it the benchmark report, where we compare your practice to other practices in the industry. And, it gives you example of what that would look like. And so what I'm going to do here is I'm going to show you actually what the report would look like for you on your behalf. So this is kind of the end product of, in fact, I'm going to show you a different report here. I'm just pulling up a different report to give you an idea. So this person actually calls themselves Big Daddy, and in their report, and so what it does is it shows you your GDC trend over the next 5 years, or what you've earned the past 5 years. It shows your profit margin per client, what the value of your practice is in 1 year from now, 5 years, and 10 years. It breaks it out in the tables so that you can see it. Then it shows you the different deal structures. Here it breaks down what an all-cash deal is, an all-equity deal, what the mainstream deal is, and then it shows you the cash flow deal as well. It breaks it down so you can compare and contrast. Then here's, a really big deal as well, that when you go through the tool that you have available to you, so this is where you can input your data to get the report that I was showing earlier. Here is that you can input your AUM, your assets acquired, your expenses. You put your sliders, how many clients, how many years in service, how many years until retirement, and then you put in your revenue the past 5 years, and then here's the big deal that for some of you that have either bought a practice or look at buying a practice, that this report that you get, it gives you 2 different tax scenarios. And what you do is you can say, if you are a buyer or seller, that you can say, okay, you want to look at two different scenarios. So the buyer wants the seller selling the book at treating it 70% capital gains, so 70% goodwill. So they can actually look at that scenario and say, okay, seller, we want 30% of it treated as capital gains, and so, that's, you've got to put, so that's what we're going to do is we're going to look at that scenario, what that tax implication is. The seller says, well, no, I want 90% of it treated as capital gains. I know the industry average is about 70%, but, I got a big tax exposure, and so I want to look at what it would look like if I was to sell it get 90% of it treated as capital gains. I only want 10% of my book treated as ordinary income in the sale. And so the buyer and seller agree, or whoever's doing the report. So you got two different tax scenarios that you can look at. And that's a big deal because in this scenario, you can see that in this example, that they treated it, one scenario was the seller treated it as 72% capital gains or goodwill, and the other one, 65%. And so in this example, we take in state income tax, and because they're in the state of California and all that. In this case, it was about $28,000 difference in taxes, treating one at 65% versus 72%. And so it's really a good negotiation tool and educational tool for both the buyer and seller to be able to use this in their next step in their practice. And that's what you can get here, and you can put in two different scenarios and get that information. And it could be an example of, if in this case here that you see on the screen, that maybe and this happened to me, this is what I did personally, is I actually bought a practice where I gave the seller 90% of it, allow the seller to treat 90% of his capital gains, but what they had to do is they had to give me an extra year in my note. So they had to carry an extra year in the contract, and the seller's like, well, yeah, fine, I can do that. That's no problem. And so that's basically how I came up with the difference in negotiating by giving 90%. Now, it's up to the seller whether they want to face the IRS and a potential audit or whatnot, because that's a really aggressive tax structure. But there's different ways, to get there. So that's what we did, and this is how that tool can be used for yourself to get this kind of report. And then as we continue on, as I showed you, you get the grades. This is where you're grading your revenue. So this practice, they get an A- grade, and the revenue for their practice are at $750,000. The national average is $480, so good for them. They get a B in their grade for AUM. The national average is $84 million, and we're taking that off of the Moss Adams report. Their AUM per client, they get a B- in their revenue per client. So this just helps someone really determine how they compare against, the best in the industry and the national average. And then all your inputs are back here. So this person generated $750,000 in GDC. The reoccurring is 70%. They got 200 clients. They've got a 1% positive flow. They think they're going to earn 6% after fees on their clients' assets going forward. They listed the age of their clients, their AUM, assets acquired in 2013, their expenses, et cetera. So you got all that data input back here that you can see. And then, it shows the GDC trend the past 5 years, their capital gains structure as well. And then here are footnotes that we have from the Moss Adams report just to verify, all the data that you've seen in the analysis. So that's what we have. Going back, just in summary, so it's a bit confusing, or maybe, but you've got your valuation here that you can go online, make these changes real time. If you want to continue to go through it and actually get your report, you just keep clicking next step, and you're good to go. and you put in your data, and at the end of this call, I'll give you a promo code that each one of you will be able to type in to actually get your own report should you want to do that. So what I'm going to do is I've been talking for 25 minutes. I'm going to stop now, unmute the phone calls, and see if there are any questions out there. And if they're not, then I will forward off to you the promo code that you could take advantage of this yourself. So I'm going to unmute you now.
The conference has been unmuted.
So how does he make a living on this?
So are there questions?
What do we have to do?
So I have a question. If, let's say you go out and you get your valuation, you get a good idea of what your practice is worth, do you guys help in anything else after that, or help with next steps at all? Financing possibly, or something like that?
Yeah, we do, and we've got different relationships with banks that that we can direct you to, and there's financing available. Some can be through us, or some can be, we can forward you off to banks that we partner with. And there are SBA type loans where you can get an SBA loan from a bank, and basically you don't have to put up any collateral. So that's good for, let's say, a senior advisor wants to sell their practice to a junior advisor. The junior advisor doesn't have the capital. There are banks out there that will offer a SBA loan to that junior advisor as long as the business cash flow. So they give it all based on cash flow, and so that's how an SBA loan type works. And so we've got some partner relationships out there that we work with and can refer the advisor to. And then there are non-SBA loans that they will require a bit of skin in the game from the junior advisor, but then what the seller can do in that situation is that if they're willing to put up some collateral from the value of the practice as the collateral and put that behind the position of the bank, then there will be banks that will still loan money in that case to junior advisors looking to buy out the practice. So different ways to go, and it matters certainly what the situation is and what the need of it is of the seller and the buyer.
Excellent, thanks.
Yes.
Trey.
Cool. So I just wanted to make you aware of it, and I'm just going to offer it up one more time. If there's questions out there, well, let me first get one response. Pretty cool, pretty slick. Have you seen anything out there like this?
Nothing like it.
Yeah, cool. Yeah, so why don't we do this?
Is there a replay of this?
No, there's not. No, there's not. But we'll be doing future webinars in the future. So if you want to be on that, just send a note and reply to the info at 3xEquity that you got it. And again, just to remind you, the website for this is 3xEquity.com, the number 3, the letter X, and then equity, EQUITY, so 3xEquity.com. So I know there's a lot of people on the phone. I see a lot of people signed up here on the webinar. So what I'm going to do is I'm going to give you the promo code for if you wanted to take advantage of getting your benchmark report, and we'll send that off to you. And then too, if there's those that you need financing, and for us to refer you to a financing source, we like to do that. And there's one in particular that we work real closely with that has done a nice job in real thorough in giving SBA loans that we would like to be able to put you in touch with them as well. So the promo code, if you want a benchmark report, is S as in Sam, G as in God, 01. So when you go through the exercise, getting a benchmark report, just put in that promo code, and for you attending today, we will be able to deliver you that benchmark report, and we'll actually be able to, what you saw, we'll be able to deliver it you the day that you signed up. So once you fill it out, you submit it. We got all these algorithms built on the back end, and we'll be able to send it to you that day. And if you're someone that's looking to get financing for either your junior advisor or you are a junior advisor, feel free to contact us as well, and we can put you in touch with an SBA bank that we think real highly of, and we'll be able to refer you to that direction. So thanks for the time.
I have a question. Where do we input this promo code at?
Here's where you go. So good question. So let me, if those of you that are still on the screen, which I see most of you still are, so you'll go down here. You just can keep hitting next step if you want, or just you could funnel through, but you're going to go right down here, and so you're going to fill in your name and to get your benchmark report, and where it shows promo code right here on the screen, that's where you type in SG01, and you'll notice there's zero cost. We won't be asking you for a credit card number at all. It's for you attending today. We're giving you this promo code and benchmark report. Just put it in there, hit request benchmark report, and we'll get it out to you that day.
If you're not on the screen, where do you go?
If you're not looking on the screen, just keep toggling through the website, and you'll see in the website where you can go to the top where it says benchmark report, and just click on benchmark report, and just keep clicking next step, and then it'll wind up asking you for a promo code, and then you can just type in the promo code. So it's 3xEquity.com, and the tab at the top is benchmark report, and keep clicking on that, and it'll keep asking you for information on your practice, and keep putting that in, typing it in, and then at the very end, it'll ask for you a promo code, and type in SG01, and you'll be good to go.
No, thank you.
You're welcome. Okay, everybody have a great day. Keep hustling out there. We've got a great profession that we're in. We've got a tremendous responsibility in managing our clients' money, and keep taking it real serious and do the best job we can for our clients.